in a pandemic and a public health emergency, particularly if you decide to prevent people from leaving their homes, prevent them from going to their usual workplaces, you are going to have an enormous economic shock. And most countries that imposed lockdowns saw that last year. It would have been crazy not to offset that shock in some way. There was a risk of economies spiraling into depression. So it was appropriate to use fiscal and monetary means to offset the shock and effectively to pay people relief. I sometimes heard the word stimulus used, but it was inappropriate. This was not a Keynesian policy. This was emergency relief. The big question is how far that fiscal support needs to be continued this year as vaccines are very rapidly returning the world economy to something like normalcy. We can't get rid of COVID, but it's going to become endemic rather than a pandemic.
Just like to add two ideas to the comments of Professor Ferguson. The first idea is that money is not wealth and debt is not wealth. Money and debt are a powerful tool to create wealth, but only if they are properly used. If not, they destroy value, they destroy wealth. That's what history and economic theory teach us. Of course, you can achieve short-term growth, but really that is short-lived. The second idea is that today the world is living a tech revolution without precedent, and that's fantastic. That's very good for the long-term growth. But to change the world, you need something more than a tech revolution. You need to fund the investing just to get in track that tech revolution. You need to invest a lot, and you need to do it in the right direction, not in the wrong direction. So what I mean is, tech revolution is a tool. Money and debt are powerful tools, but really you need to base all the shift of the economy in not in debt, but in equity, in capital, and that's very important, because if not, the result is that you will be creating asset bubbles and you will be creating a giant with feet of clay. You will be wasting your money, throwing your money. So in my opinion, excessive debt produces higher prices for the same assets, and that's not the way. The way is to dedicate capital and money to invest, to create new assets and foster innovation.
I do worry that much of the expansion of government involvement in the economy necessitated by the pandemic is going to persist even as the pandemic comes to an end. That kind of bureaucratic inertia is something we've seen before. For example, in the 20th century, government controls persisted after both the world wars, and it proved very difficult to remove some of the restrictions that had been emergency measures, but became permanent in the post-war period. So we need to learn from the mistakes of the past and remind ourselves of how we managed to revive growth after the stagflation of the 1970s with all kinds of measures of deregulation that brought market forces back into play. So although I think there's quite a significant risk of overreach, I'm not too worried about it, because I think people are going to notice quite quickly that the policies that are being attempted by left-leaning governments simply are not sustainable and will have to be reversed. I want to reiterate, emergency measures are for an emergency. And history tells us that when the emergency is over, so should the emergency measures be.
One of the consequences of the last two economic shocks, the 2008 Lehman crisis and the 2020 COVID crisis, is the bigger role of governments. People wish to feel more protected by the government, and governments are very happy to expand their reach. As a result, governments have fallen into significant fiscal deficits, and they have found a very effective way to finance their expansion. That is, selling debt to the central bank. The central banks print money, and they buy directly or indirectly the bonds issued by the governments. And well, that's working. That has worked quite well. with no inflation, as Professor Ferguson has said, and everybody is very happy with this. And this is possibly this model of monetization of debt is possibly the most important change in economic policy in the 21st century. And well, in my opinion, it is a big. We have a big risk if we think that this is a good model. In the short term, the model works, but in the long term, the model doesn't work, because we are demanding and we are expecting from governments more than we should expect. In my opinion, central banks have a very delicate task, because we are asking them for something beyond their capacities. Central banks have supported the full weight of the economic challenges in the last decade, and they have now an almost impossible mission to return to a certain level of normality without provoking major economic and financial turbulence. Central banks should be, in that effort, independent not only of the governments, but also of people, and also independent of financial markets, because people and financial markets have created excessive expectation. And this is going to be a real test for the independence of the central banks. There have been moments of the whatever it takes story, probably 2008 and 2012 with the euro crisis, or 2020, but not today. Today is not the moment of the whatever it takes. Today is the moment of coming back to normalization. And this can be challenging for everybody, also for investors. And in my opinion, we should prepare for possible corrections and think long term. It's a big test. It's a big test for the central banks. They should be independent. They are having hard times, and they're having, as I said, a very difficult mission to come back, to reverse their policies of easy money, because it's not easy. It's not, and they will have a very hard task in that.
The role of government, the role of the state, is to provide a framework within which property rights are secure, taxation and monetary policy are on a consistent path, that the size of the state does not exceed what I think would be a reasonable share of gross domestic product, let us say somewhere between a quarter and a third. That public debt should not exceed roughly the size of the economy of gross domestic product. But those are the ground rules. Taking a historical view, it's very clear that the role of government has grown considerably since Adam Smith published The Wealth of Nations in 1776, also the year of the American Declaration of Independence. The closer you can get to Adam Smith's ideal of a relatively small government that secures property rights, creates consistent monetary fiscal policy, the better your economy will do. And there is nothing better in economic terms than high sustained growth rates that distribute wealth and distribute income to the population. The state cannot do that. That can only come from entrepreneurs, from wealth creators. And the more the government gets in the way of the process of wealth creation, the slower the growth rate will be. That is just economic history.
There's no doubt that the post-COVID world is a world in transformation. We want a safer world, we want a cleaner world, a greener environment, more digital, more sustainable, with more better values. And at the same time, there's no doubt that there is a very widespread feeling of inequality among the European and US middle classes. Many people feel like left out of the prosperity, and they are against globalization, and they are against, and in some way, the social contract that implicitly has worked during the last decades is now under question. No? There's no discussion about all the above. The discussion is about who should take the lead to build the post-COVID world with these values, with this transformation. Who should take the lead? The state or the markets or the private initiative, no? And really, as Professor Ferguson was saying, most people today turn their eyes to to the governments and to the national governments. They are against globalization and they want protection from the national government. No? And in some way, the new mantra is like more state and less globalization and less private initiative. It's like the new mantra, no? The new. But this mantra, more state, less globalization, less private initiative, is not the model of the 21st century. The 21st century society needs more globalization, more innovation, more private initiative. I fully agree with Professor Ferguson, and that is the model, no? And that leads us to because really states are very good for promoting social equality, but they are not good in creating wealth. And the first thing to distribute wealth is to create wealth, no? And that leads us to how, in my opinion, no, to how the companies and the markets should change in this and are changing, in fact, in this post-COVID world, which is what we call the conscious capitalism, or the social role of companies and markets. No, the pandemic has taught us an important lesson. The lesson is that if we don't get an acceptable level of common well-being, we will not be able to reach a good level of personal well-being, of individual well-being. It's a little bit different to the idea of Adam Smith. Adam Smith said, if you pursue your particular interest, you will achieve at the same time general well-being. That is Adam Smith, and that's okay, no? But now it's a little bit different. It's the idea that without a given level of general well-being, you are not going to obtain any particular benefit. In a world of poverty, of disease, of pollution, nobody will obtain personal benefit. That is the change a little bit in the role of companies. Companies, well, they will of course pursue their profit, no doubt, but they will have to know that they have also to promote, to foster social and common well-being, because if not, they are not going to obtain individual profit. That's what we call conscious capitalism. Capital markets should play a bigger role in the post-COVID world in order to achieve economic prosperity for all. And that in my opinion, that is very clear. But what happens? Today we have excess debt and we have excess liquidity. And the problem is that with so much money floating around, it is difficult to avoid casino-like behavior. We have seen the SPACs, we have seen the meme stocks, we have seen the cryptocurrencies or crypto assets skyrocketing, social networks moving the markets with this kind of financial influencers, and that is the worst part of the market. So markets really should take the role, should take their enormous responsibility to allocate well resources to foster innovation, to foster that new post-COVID world with better values, with of course with profits for the companies. Of course, that is the key of the capitalism, and that's very clear. But always having in mind this common well-being, because if not, we are not going to obtain this particular benefit. That is my idea. And markets are very important. So no more government, more markets, more polarization, more private initiative, in my opinion.